FutureTrend channel is glad to welcome all of our subscribers, and for the date of 28th of January 2019 we are ready to present our point of view of how to trade major currencies in the world financial markets. As regarding today, we suggest that market participants should concentrate their attention around the scheduled for this week Federal Open Market Committee meeting that should take place on January 29 and 30. Of course, it should be more or less interesting and important for the financial markets because traders are trying to find the clues of how to trade major currencies in the closest future, and that's probably should explain why the United States dollar is looking weaker than usually at the moment. We should understand that 2019 should be the year of falling United States currency because of first of all less aggressive Federal Market Open Committee, and also because of environment, and an environment now is not also welcome for the rising United States currency. And from that point of view, a globally falling economy should also contribute to the point of view of the members of the Federal Open Market Committee that they should take a pause in its tightening cycle. And probably during this week, Jerome Powell will announce such kind of point of view. Let's wait a little bit for the final verdict. Now we are ready to accustom you with our technical point of view of how to trade major currencies. As you could see, we have in all types of four probably most liquid financial foreign exchange pairs, we have some kind of positions, and all of them are against the dollar. I mean that all of them are short United States currency. Let's see the charts. For example, as regarding the euro dollar, we suggest that if we look on the daily chart, there is an important kind of barrier to the upside that's located around the highs of January, the highs of this year. That's located around let's see, around 1570, and not far from this level is also located the so-called moving average 200 daily line, at the moment at 1572. That's why we suggest that in an environment of falling dollar, and in case of acknowledgement of less aggressive monetary policy stance from the point of view of the Federal Open Market Committee meeting, and from the point of view of Jerome Powell, the president of the Fed, probably in this case we should see a continuation of the current weaker dollar trend, and we could retest this kind of highs of this year. That's why we suggest that it's time to have a long position in the euro dollar, both from fundamental and technical point of view. We suggest that the level of 113 should present an important barrier to the downside, where located a lot of bids, much stronger than usually. And taking into account that the market, the foreign exchange market, is more or less priced in much less aggressive ECB, and in this case we should wait far longer than expected before for the first hike from the part of the ECB, probably in the next 20 2020 we could see it's at the beginning of next year, but the market is still not pricing in the fast increase during the 2019. From that point of view, taking into account that the market is priced in the less aggressive ECB, we should understand that the downside potential of the euro dollar is looking quite limited for now. As regarding the dollar yen is trading around 109.33 at the moment. We continue to suggest that the level 110 should present a kind of important barrier to the upside, both from a psychological point of view, 110, and also here we see kind of an interesting resistance. Break and closing above that level should probably move attention of market participants further to the upside, and in this case we could see a retest of the moving average 200 daily line located at 111.25. Anyway, now we suggest to wait a little bit and to keep our short aggregated position in the currency accumulated at the level 108.975 with a stop above the so-called psychological level 110. We continue to target the level 105 to close a position. As regarding the cable is looking especially buoyant at the moment. We should understand that now we are above moving average 200 daily line, that's located at 130.59, and should present a first important support barrier to the downside. Also, we broke and closed above the former downtrend line located around 130.90, and also from that point of view we should continue its progress to the upside, and probably in case of a better environment for the sterling bulls during this week, for example in case of confirmation of the so-called agreement between current ruling party of Theresa May in the British Parliament with the so-called Northern Ireland Democratic Unionist Party. In this case, if the so-called Northern Ireland Democratic Unionist Party will really support the Theresa May Brexit plan, in this case we could see a final approval from the part of the British Parliament of the Brexit deal, and of course it should lay the ground for further upside progress in the price of sterling, not only against the United States dollar but probably against some other pairs, sterling crosses. And from that point of view should concentrate our attention on the level 133, where lies the highs of 19 of September 2018. But in better cases we could really target the level 136 and even 138 in case of really turning to the bullish side. As regarding the dollar Swiss, we're approaching a kind of interesting support level where is a confluence of the so-called 100 and 200 daily lines, both of them located around the level of 0.99, and in case of breaking and closing below both of these lines we could see a continuation to the downside, and in that case could retest at the so-called uptrend line in the currency located today at 0.9750. That's why we continue to to keep our short trade recommendation in the dollar Swiss initiated at the level of 0.9980 with a stop above the psychologically important barrier of the parity level. At the moment that's all. Probably we should also to tell some words about the Russian ruble. And with Russian ruble, as you could see, we accumulated some long positions in both ruble pairs like euro ruble and dollar ruble. But here we have to take a part of cautious. First of all, we should understand that Minister of Finance of the United States decided to take off the so-called sanctions against aluminum giant of Russia, Deripaska. You know, the Deripaska companies like Rusal. And of course, it should contribute to, probably from first point of view, at first glance, it should contribute positively for the Russian stock market as well as for the Russian ruble. Anyway, we continue to suggest that from technical point of view, both of dollar ruble should find a floor against the so-called important psychological and technical barrier of 65, as well as in the euro ruble. This level is located around 74, and we continue to suggest that while above these two levels, the ruble crosses should continue to progress higher, but maybe not to progress higher, but to be in the so-called range, like for example in case of dollar ruble, the range of 65 per 70. Thank you very much, ladies and gentlemen, for all of your attention of our channel. We continue to provide you an interesting information about different currency pairs, but of course we should understand that our primary goal is to advise you the safest kind of alternatives of how to trade different currency pairs in the world financial markets. Thank you, take care, and see you tomorrow at the same time. Bye bye for now.